Alright, welcome back everyone to another market recap. In this video, I'm going to be reviewing the market for both yesterday and today, so the 26th and 27th of December, the 2 days after Christmas. Now going into these past 2 days, I was anticipating expansion towards all-time highs, but I learned a very valuable lesson, and that is if you don't have any highs and lows to keep running, you will run out of momentum. You can see here that we don't really have more liquidity to run here. The market runs by running liquidity. So what happens? We hit this 4-hour BPR here, so that's overlapping bullish and bearish for value gaps. And we start to lose steam. We get SMT here. And so what happens? It needs to go take out someone, so it comes back on itself and runs its own liquidity here. So we get SMT at this 4-hour BPR, and then where do we go? We run straight down to take out this LRLR right here. And this is just really good LRLR. So once the market started to show its hand here, that it wanted to go lower, you'll know that the market's drawing to this LRLR. And this is something that I should have been more aware of, like, at the time. And it's something I'm getting better at. But this is just a really good LRLR. So anyway, moving down to the lower time frame, we had this SMT here. So you'll note we have SMT with YM here. So when you start to put everything together, you can frame a really nice sell model. We had a low time frame SMT here. We had, you'll note here, we had this final up close candle, the opening price of that. That's an order block. So boom. So for our OB, and then right here you have another 4-hour OB. You can mark it out as this or this. And so I made a really nice diagram of this entire thing because I was backtesting basically most of the night tonight, just because I was wanting to just keep getting a little bit more experience. And yeah, basically this is just a giant sell model, right? We come up and we get this SMT, 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 push into this key level, inverse this gap here, and then the final thing to top it all off, check this out. We get another SMT here. Let's actually let's save this as SMT so we don't have to keep changing it, because I like the smaller one a little bit better. And so we get SMT. You'll note as well that this was London's highs here. So we sweep out London's highs and push into that 4-hour key level. So pretty crazy. All right, boom, boom. And so guess what else? This was right above the midnight open. So you want to sell at key levels above the midnight open and or when something just, when you ever see the market do this where it goes just barely above the midnight open and then reverses the other direction and it sweeps out some form of key liquidity like this, it's like a pretty big sign that it's about to expand the opposite direction, right? Because the midnight open kind of like directs price where it wants to go. So we had this really good LRLR here, and you'll note that if you measure out standard deviations of this, check this out. There's your 2 to 2.5, and there's your 4 to 4.5. Measure out from the wick, get a little closer to that LRLR, but I'm actually interested to, I think it must have been this one, because there was one of them that lined up a little better. Yeah, this one lines up a little better. So here you have this 4 to 4.5 lining up a little better with the bottom of this LRLR here. So a possible trade you could have taken to take advantage of this giant sell model, or there's quite a few trades actually, but what you could have done, is within here, right, we get S&T sweep London's highs. We have really good low resistance liquidity here. So going down the lower time frame, a possible trade you could have taken here, I guess there's quite a few options. One option is once you get a close below this 15-minute breaker right here, you could simply enter off of that. And then basically after you run the LRLR, you can move stop to break even. And then let it run if you wanted to. And yeah, that would have been crazy. Open, high, low, close. So we also went right to the daily distribution level on StatMap, which is pretty cool. But let's go over some actual trades you could have taken. So unfortunately, I got on the charts a little late. So I kind of broke my rules because one of my rules is I need to get on the charts on time. So very frustrating that I didn't. But that's okay. I'm going to keep working on it. And so anyway, the first trade I noted that you could have taken was essentially same thing here, but I didn't realize that this was a giant sell model on the higher time frame. All I saw was in the morning we had really good generated liquidity here. So this is really good liquidity, right? I mean, anyone, when this comes down here, anyone that bought in this range is going to get stopped out. So you know you can sell up here, and then you're going to be able to sell down here for a profit. I think I might need to resave this as LRLR. Okay. So the trade that I saw you could have taken was essentially we have this breaker block here. And then on the retracement to this fair value gap, it's like a sniper entry right here. This is honestly fair game since we're so close to that LLR, and we swept out London's highs. We should at least go run London's lows. You can see London's lows are I don't know why it's not showing up. I don't know where it went, but London's lows are right here. So we go down right to London's lows, and this is also the end of this LRLR here. So boom, right to London's lows. That's where I would have taken profit. Stop loss above the breaker. And as well, this was going into the macro here. So this was going into the 820 to 840 macro. So I think this would have been an awesome trade. I mean, yeah, right in the middle of the macro. We go run that liquidity. It's the exact time you would expect it to happen. So really good AMD here as well. Just giant accumulation range. Manipulation above London's highs into that key level. And then distribution down. And you'll note that, yeah, if you measure out the standard deviations of this, once again, you get a pretty good projection of where the market wanted to go at that point. So let's get rid of all that. There might have been some more trades you could have taken within this, but they're all different versions of the same story. That's essentially what happened. We swept London's highs into the 4-hour order block. We got SMT, and then we distributed lower within the giant market maker sell model here, right? So all the no matter what kind of trade you took in there, it'd be like all kind of different version of the same story, right? The market was drawing lower at this point. It ran out of liquidity to take up here, and so we end up going and running these lows here. Now, the next thing I want to say is, so the market comes back down. So note as well, this 4-hour VPR is in premium. So if I measure from here to here, boom, boom, boom. Let's turn on my premium discount tool here. Yeah, you can see that. What the heck? It was upside down. Okay. You can see that this 4-hour VPR was in premium. We got SMT there. Where did we want to go? We want to, at this point, we reacted here. We probably want to go to a discount key level, from within this range. That's the next place the market wanted to go. So, guess what discount level we went to? Check this out. We went right to perfectly is exact. This daily order block here. And so, if I go down the lower time frame, you can frame a buy model off of this, right? We come down, push into this level here, at which point you can frame a buy model in whatever way you want. So we'll go over some trades you could have taken here. There are a lot of opportunities after the expansion, actually, which typically doesn't always happen, but there were a lot of opportunities. And I'm going to be going over some other trades as well. One trade I will note right now, since it already happened, is Dodgy. It's cool to know that Dodgy caught this as well, down to those lows, and those lows were just like really good trendline liquidity. And since the market was in a sell model, it really wanted to go there. So nice job, Dodgy, on that. Anyway, coming down here, As well, there's a lot of trades you could have taken in here as well. So I need to go through that. Let's do that first. So going into Thursday, so we get this SMT, and if you measure this out from here to here, the market expands to where? The 2 to 2.5 standard deviation. So I noted that happened, and I noted that we came down to this 4-hour for value gap within discount. So at the time, I didn't really know this was a sell model yet. I personally thought that we are possibly going to have a buy model here. So here you have that 2 to 2.5, and it's pretty reasonable to think that, right? Because we don't have this SMT yet, and the market has been bullish. Like, it's been expanding, so I was expecting a buy model to form off of this. I did not realize that this 4-hour BPR would become so significant. It eventually became pretty significant. And that's just because, one, SMT formed here. But two, there's just no more highs to run. You run out of highs to run, then the market just loses steam, loses gas. So, okay, going back to the 1 hour for value gap here, you can see that we swept out this low. Well, I guess first of all, let's go through the lower time frame and talk about like what I was thinking and exactly what happened at every point within here. So, during this, you really have to be careful because you still have, on one hand, you have LRLR there and LRLR here. So you have LRLR below you and above you, and so any trades within here are kind of tricky because you have to be really careful. The market could decide to go either direction. So right here is kind of just like, okay, it's consolidating, taking a long here might make sense, but you have to realize like we're within this fair value gap here, and there's LRLR below, so that's why this long didn't work right here. Okay, so at this point, we have a pretty nice accumulation range that forms right here, and one thing to note is if I turn on session stat map here, go to historical sessions, turn on 5, boom. Check this out. We have our different session levels here. So this is the statistical expected manipulation on a bearish day for New York session. This is the statistical expected manipulation for a bullish day on New York session. So we go to the statistical manipulation level here. There's that stat top right. So this is the session M minus. So I like to use this as a confluence when I'm framing a trade. So like we're going to the statistical manipulation level. Okay. And then what's down here? We have a data low, right? So at this point, we're having really good AMD. So although initially I was bullish, I have to be able to recognize what's going on and say, wait a second, we're hitting that session manipulation level. Even though we're reacting from this daily gap, we're possibly getting AMD. And what happened on the very low time frame here? If you go down to the 30-second, you can see that we had really, really good trendline liquidity. And so this is the key, right? Even if you're bullish, even if you think the markets are going up and up and up, if you see really, really good liquidity like this, you have to acknowledge it, especially when there's an accumulation range here. So what happens? We close below this 30-second gap here, 30-second IPG, and then on this close below, this is where I would have entered short on this candle body, stop loss above the old candle before the fair value gap and of the old fair value gap, and simply at this for here, target the other side of the accumulation range if you want. That would have worked out perfect, 1.5 to 1. You could have also targeted the end of the LRLR. That would have worked too for a 1.23 to 1. And if you wanted to as well, you could have targeted the data low, which was, where was the data low? I guess it was down here. I guess it was right here. So if you wanted to, you could have targeted this data low here. This would have been your one setup for life. Personally, I just shoot for a 1-to-1, but you could have shot for this data low here, top right, data low, and this would have been a 2.6 to 1. And if you had a tighter stop here, just depending on if that's your preference, it would have been a 3 to 1. So I think there was also SMT here. Let me go check. Yeah, there's SMT with this high and this high. So SMT right here. So that was an awesome confluence as well. So just really pay attention to what's going on in the moment. And even if you're bullish, if you get SMT here and you inverse the fair value gap with really good trendline liquidity and a data low and clear AMD, just be prepared to change your bias. And then, I mean, note as well, this is also the macro. So from 9:50 until, yeah, the macro time, I mean, it goes all the way till here. So, but the trade would have happened at the very beginning. And yeah, then a trade that I actually did take was I missed this unfortunately because I wasn't looking at the 30-second and I was bullish. So I had to stick to my bias at the time, but I didn't need to be bullish because we genuinely did not have any liquidity to take out in the short term. We were in that giant 4-hour BPR, so there was no real reason to be bullish. And so we have this 3-minute fair value gap here. This is a BPR. So I actually did try this inversion on the 2-minute. It was worth trying. D-Trader and I tried this 2-minute inversion. And, you know, in case this external gap did break, then we could just take it up. But it ended up stopping us out at break even. But then, after we pushed back down into this BPR, we got a 1-minute inversion here. And longed right there. I put my stop kind of like right here. I think. No, yeah, it was right. It was at the low. I actually did keep it at the low here. But I honestly could have put it a little higher. And so I quickly moved stop to break even. And I just targeted the end of these highs because these highs are more trend line like than this high. So I just wanted to hit the end of this trend line here. And that was what I hit was a 1.4 to 1, and I copy traded this. So that was a really nice trade that I caught. So pretty sweet. But once again, yeah, I was bullish, and so you could have caught that. And then let's see. I'm sure there were lots of other trades you could have taken, but we should probably just move on. Oh yeah, there was so at this point you could probably frame a buy model here I think we had a SMT with YM here. So possibly frame a buy model. And we swept out the data low. But the main issue is you're facing another BPR. And then we hit this order block. And eventually we hit this 15-minute breaker with these series of down close candles. And this being at the top of this BPR, the market could not get past this. And so anyway, a trade that I did end up taking because I was bullish at the time was I noted we had a 2-minute breaker block here, and we had a fair value gap overlapping. So I took this up to I think I just took it like a 2-to-1, or I was originally shooting for London's highs, so we had London's highs here, right here. I thought that's where the market was drawing to because the standard deviations lined up there, but I took partials here, and the rest got stopped out at break even because it did not hit London's highs here. So there's that 2-to-1, and yeah, there's just so much to cover in these videos now. Like, initially I was like, oh, there's only going to be so many trades a day, but like, honestly, there's so many possible trades you can take every day. And so I'm realizing that now, that it's just like, I mean, I want to talk about everything, but I legitimately don't know if I can. So this inversion right here, you can take this, but once again, like understand it from a liquidity point of view. Like, you want to target like previous highs and lows. So I mean, this would have worked, but maybe it's not the highest probability because you're not targeting, like, for instance, that other trade that we had where we had, yeah, you have really good LRLR right here, right? This people are gonna get stopped out here, and so that's where when we go up here, it's a good trade to go take this out, right? So there's just a difference in understanding, like, sure, yeah, this is the right signature and price, but we're not really targeting any specific liquidity. Now this trade, once again, it's actually the same kind of thing. Like, we're not really targeting any liquidity, but I thought we were expanding to London's highs. So in hindsight, could this have been a little better to possibly actually go run liquidity? Yeah, but I thought this was a buy model, right? I thought we were within this buy model here. So anyway, boom, boom, and yeah, then going down here, yeah, I guess it's taking a while to film this. I'm just gonna skip to the best trade that I saw you could have taken, which was simply we had this breaker block, these up close candles before the move down that swept liquidity. Here's that, and then here you have a fair value gap, and here you have that breaker. And then within here, I got a lower time frame entry. I think what I did, so this was a 5-minute breaker, right? 5-minute breaker and 5-minute fair value gap. Right here, this 5-minute up close candle, and then there's a 5-minute, kind of like a 5-minute gap in there. So one trade you could take is you could get a lower time frame entry here with when you get a, like for instance, a 3-minute, when you get this 3-minute breaker that forms here, you can enter off of this. Right when this 3-minute breaker forms. So this is the breaker right here, the low, high, lower low, higher high. On this higher high's close above this old up close candle, you could enter there, or you could wait for a retracement to the breaker, and then stop loss goes down here, and you could just target this high for a 2.3521 trade. Yeah, I feel like I might need to just, I don't know, go over less, because I feel like when I try and cover everything, the videos just get lower quality. So I might just start covering less, but we'll see. And then as well, you'll note that right here we had an inversion. So I actually took this on one copy trading here, and I just took this to go run this LRLR here. And I entered here. Stop loss was just kind of like around right there, I guess. And I just shot for 1-to-1. So I guess it was right here. All right. Yeah, I got to get better at filming these, because I feel like, yeah, in the future I'm just gonna not cover so much and just try and like explain things a little slower and a little simpler. I feel like I definitely overcomplicated things in this video, but you get the idea. Hopefully you found this video helpful, and I will see you guys in the next one. Bye.